Hello dear students, this is the continuation video related to the final accounts of sole trading concern. In this video, I will explain the format of profit and loss account and how to prepare it with one simple example problem. The profit and loss account is mainly prepared to record the office transaction. So, any expenses related to the office and any income received other than the trading should be treated under the credit side of the profit and loss account. So, in the profit and loss account usually we are supposed to record any revenue expenditure and the revenue income. I think you know the meaning of the revenue expenditure and the revenue income. Any expenses, recurring expenses to be treated under the profit and loss account. Say for example, if you have purchased any plant and machinery, it is not a revenue expense, it is a expense but not a revenue expenses. So, but depreciation on that plant and machinery is a revenue that should be treated in the profit and loss account. In the same manner, if you have received any rent or any commission or any interest during the year, it is a recurring in nature, that is called as a revenue income. So, for example, any capital introduced or any kind of the debtors, it is not to be treated in the profit and loss account, that should be treated in the last step, that is in the balance sheet. Okay, now let us see the format of profit and loss account. So, in the profit and loss account, just like a trading account, there are two parts or the two divisions. The first one is the particulars and rupees, debit side, credit side, particulars and the rupees. The profit and loss account is the continuation of the trading account. How? The result of the trading account is transferred to the profit and loss account. So, the result of the trading account, in the previous video I explained the trading account with one example where there was a gross profit of rupees 1,65,000. So, the same amount is transferred to this account. The profit, when it is brought down, it comes automatically on the credit side. So, by gross profit transferred. So, this amount is transferred from which account? It is from the trading account. Under the credit side, usually the incomes are recorded. Incomes means recurring incomes are recorded. The first one is few examples like by rent received during the year, by commission received, by discount received, by bad debts recovered. If you received any bad debts which was written off during the previous year, it automatically becomes the income. And the last one is by interest received. And all office expenses which is in the form of the recurring should be treated on the debit side. The examples are salaries, to rent, rates and taxes, to office lighting and heating, to printing and stationery, to insurance, to postage, telegrams and telephone charges, to legal charges, to audit fees, to repairs, to depreciation. So, depreciation means you know that we can charge the depreciation on land and building, plant and machinery, furniture or whatever it is. The interest paid, if you have paid any interest on loan borrowed or any kind of the capital, that has to be treated on the debit side. If you have given the discount to your customer, then that is called as a discount allowed, take it on the debit side. Bad debts, if there is any bad debts, that should be treated on the debit side. Commission paid, carriage outwards. So, carriage inwards means it is on the goods purchased, carriage outwards nothing but the selling expenses. Selling expenses is to be treated on the treated in the profit and loss account, carriage outwards. So, any carriage paid at the time of sale of the goods. Travelling expenses, interest on capital. And after treating all these adjustment, the next important step is to know the financial result. So, what is financial result? Whether the business has earned the profit or incurred the loss. The final result is called as a net profit or the net loss. So, net profit, if the credit side, so credit side means the gross profit plus all the recurring incomes which has been treated on the credit side. If income side is more than the expense side, means credit side is more than the debit side, then the result is called as net profit, and the net profit is to be transferred to the capital account. In capital account we are supposed to add it because this net profit belongs to the proprietor of the organization. So, hence we are going to add that net profit in the liability side of the balance sheet. In case of net loss, here If the expense side is more than the income side, the result is called as the net loss. So, then whatever the result is, net profit or net loss, it has to be transferred to the balance sheet. How to treat the net loss? So, the net loss is to be deducted from the capital because it is the liability of the owner. So, he has to bear the loss, hence the result is transferred to the balance sheet. Now, we will see simple problem on the profit and loss account. From the following particulars, prepare profit and loss account for the year ended 31st March 2024. Gross profit rupees 1,40,000. So, gross profit is ascertained by preparing the trading account. In this problem, it is directly given gross profit. Gross profit to be taken on the credit side. Salaries, expense, office expense to be taken on the debit side of the profit and loss account. Administration expenses rupees 10,000. It is also indirect expenses to be treated on the debit side of the profit and loss account. Selling expenses like carriage outwards to be treated on the debit side. Selling expenses in the form of carriage outwards or the advertisement, anything like that is to be taken on the debit side of the profit and loss account. Rent paid rupees 5,000 to be treated on the debit side of the profit and loss account. Commission received is the income to be taken on the credit side of the profit and loss account. Sundry expenses or any other miscellaneous expenses, it is also to be treated on the debit side of the profit and loss account. Now, we will see the solution. Profit and loss account for the year ended 31st March 2024. So, debit side there are 2 columns, particulars and rupees. Credit side 2 columns, particulars and rupees or amount. 2 salaries rupees 28,000, 2 administration expenses rupees 10,000, 2 selling expenses rupees 20,000, 2 rent paid rupees 5,000, 2 sundry expenses rupees 10,000. These are the expenses incurred during the year, and the total of the expenses is rupees 73,000. The total is rupees 73,000. So, before taking the adjustment on the debit side, the first thing is we should brought down the result of the trading account. So, here as per the instruction given in the problem, there is a gross profit. So, gross profit brought down on the income side, that is on the credit side, is rupees 1,40,000. And during the year, the other income is in the form of the commission received rupees 7,000, and the total of the income side is 1,40,000, means credit side is 1,47,000. But the expenses is rupees 73,000, means what? Income is more than the expenses, and the final result is there is a net profit. Net profit of rupees 74,000. How the 74,000 has been ascertained? The credit side is 1,47,000, whereas the debit side is 73,000. Deduct that 73,000 from 1,47,000, the balance amount is 74,000, means excess of income over the expenses. It is a net profit, and where we have to transfer that net profit to the balance sheet. In balance sheet, under the liability side, we have to add this net profit to the capital. This is all about the preparation of profit and loss account. Thank you so much.